Hello, and welcome to another edition of Selling Life and Annuity. I'm Tim Luby. I'm the National Sales Director for Annuities here at Gord Marketing. And with me today, I have my good friend and associate, Paul Bechtold. Paul, your title is?
I'm the RVP of Elimination platform with Gord Marketing.
Yes. And today we're going to talk about the biggest mistakes that people make in selling life insurance.
Well, Tim, as we try to do various episodes of Selling Life and Annuities, I always try to think of things that not only maybe apply to the life side, but maybe would apply to the annuity side of the business as well. So I'm sure you're going to see some common denominators here as we go down through them, but I think it's really important because when you say life insurance, whether it's to an agent or and definitely to a client, a lot of them have this thing about, well, there's premium paid, somebody dies, and there's a death benefit that comes out, and sometimes they just never move beyond that, right? And so I wanted to...
Yeah, so it's complicated. They need some guidance, and that's why they have life insurance salespeople. So to sort of get started with that, what is the best kind of policy for most people? Where do you start?
Well, first, there is no one best because it depends on what the fit and the needs is. So I should always start with a needs analysis first. That would be the first thing. But the first thing I would say is that most agents and clients, number one, don't look beyond the death benefit. That's the first problem. The second problem I see most in the life insurance part that you probably don't see as much on your side is a lot of times they're just underfunded. They don't have enough death benefit, or they aren't funded long enough if it's a permanent policy. And the third type is a lot of times I see the wrong type of insurance being sold.
So you mentioned permanent, and it is funny, some of the analogies, when I think of the question in itself is what's the best type? And I always cringe when I hear that question on the annuity side too, because the answer is always, it depends.
Right.
But you mentioned permanent. So is permanent always more expensive?
Well, that is obviously, if it wasn't, then everybody would buy permanent to begin with, right? So term insurance, I like to say, is you're buying an if product for a win scenario, right? So for term insurance, we're renting insurance for a period of time. And at 1 second past midnight of that last day of that policy, it's as though it never existed, right? So the attraction of term insurance is it's much cheaper, right? Because it will not last for the client's entire life unless they die within that period of time, right?
Right.
But over the long haul, it would surprise people to know if people keep replacing term insurance with more term insurance, or they convert, or they do other things, it actually costs them more over the long haul to buy term insurance versus taking it on the chin up front with the cost of permanent insurance, but then fixing the cost for the client's life.
That's kind of interesting. So, so obviously backing into the right kind of insurance, the right type, but what's the standard death benefit? Is there a rule of thumb for how much death benefit you typically recommend for someone?
Actually, what I do see a lot of in my travels as I go around and help people with debt elimination and various other life applications is I see a lot of $100,000 term policies out there. I see a lot of sometimes $250,000. They seem to hit these mile markers of 100, 250, 500, right? And nowadays, $100,000 in most instances is simply not enough death benefit, okay? As we said, it should always start with a needs analysis. And a good rule of thumb is that an insurance company will allow up to 20 times a person's annual income, okay? So, if somebody is making $50,000 a year, obviously $1 million is not too much death benefit, but the average person thinks of $1 million of death benefit as being just a humongous amount of death benefit. Right. And it's today's economics, it's not that much, is it? No.
And we know that on the retirement planning side too, on the annuity side, they're always looking for a comfortable number, and often $1 million is not enough anymore.
Yeah.
To have saved for retirement. So we talked about the death benefit. But the life insurance is. I hear from you sometimes about the multi-uses of it, almost like the multi-tool. I can't think of the name of it. The Swiss Army
financial
knife.
Swiss Army knife.
Right,
yes.
Right. So, but what are some of the things that life insurance does besides just provide a death benefit that are important?
Well, the first thing is, especially in the permanent space, almost exclusively, and even in the term space, there's living benefits. Okay, if somebody were to get sick, they have a critical illness like a heart attack, cancer, or stroke, for example, it can provide a conversion of the death benefit while the person is alive. Okay, then there's obviously multiple applications of the cash value growth in a policy as well. So specifically in the debt elimination space, we structure our policies for what we call maximum accumulation. I'm trying to buy the minimum amount of death benefit, get most of the premium going to the cash value and starting to grow, and then we leverage that for the use of eliminating debt, but also creating liquid wealth along the way in somebody's lifetime. And by the way, somebody doesn't have to be 59 and have to get at their money like they would in an annuity, right? So I have a better place to store money, grow it tax-free, take it out tax-free if it's structured properly, and use that money during a client's lifetime within the policy. Obviously the living benefit aspect of it, but then, turning on a retirement income and at the proper time in life where it's going to pay out permanently, or purposely never going to repay the loans back potentially and deduct it from the death benefit.
Right. So many potential uses for life insurance. And I know that you do a lot of the heavy lifting and case design and that kind of stuff on the life side with the people that you work with. But if I, as an agent listening here, if I'm Gordon Marketing, how can an agent learn more? How can they plug into the solutions that you're aware of that you can help them with? What's the best way for them to engage?
Well, one of the best ways is they should subscribe to our Life and Annuities channel. I mean, we come out with a new piece of information every Tuesday for them to take a look at and give them sales ideas and all that, okay? They could call us up directly. They could look in the a lot of the carriers have advanced planning, case design resources in the back office. That's an excellent place to watch videos, just learn about, key man, buy, sell, executive bonus programs, even pension plans, and more, advanced case design plans. And I like to say, kind of do a crawl, walk, run. Kind of start maybe looking at things beyond just term and final expense insurance. Look at permanent options, and look at ways in which they can position life insurance as a lifelong tool for their client.
That's a good way to look at it, kind of a lifelong tool. I like that. Well, I think we're kind of running out of time, but for those of you that are engaged, if you'll do us a favor and click the link below and please subscribe so that you'll get all new episodes of Selling Life and Annuities. And so with that, thank you very much for tuning in, and happy selling.